Okay, we're gonna jump straight into this. In trading, one of the most important things, if not the most important thing that you need to have locked down, is risk management. Very, very, very important. And so many people seem to fuck this up so often and so easily. And it kind of blows my mind. So I want to do just a whole video on my risk management plan and a few of the topics that I want to cover: how to actually see what you're risking, funded account risk management plan, and how to prevent yourself from breaking your risk management plan. So let's start with the first one: how to actually see what you're risking. So a lot of you probably trade on the same platform as I do. I use Project X with Alpha Futures and Top Step. Seems to be the most popular. But as you'll notice on Top Step, there's not really a very clean way to see exactly how much you're risking. Now, I get a lot of people that ask me, how many contracts do you risk per trade? That is probably my least favorite question of all time. How many contracts do you risk? The reason why I hate that question so much, it depends on the trade. Like, there are certain trades I could be aiming for 80 points on NQ. There are certain trades I could be aiming for 20 to 30. The contracts are going to be different. Nobody here that's watching this video, nobody got into trading to make contracts, have more contracts to their name. Everybody in this video got in trading for the same reason, and that's to make money. So in terms of risking, I don't give two shits about the amount of contracts I use. The only thing I care about is what is the dollar amount that I'm risking. That is the only way to properly leverage yourself. So as you'll see, you can set your P&L box here. So let's say my take profits up here, my risk is here, but there's no way to just cleanly, like, notice how there's not a dollar amount until you actually press the buy button. So I can't see what's the dollar amount that I'm risking. I'm pretty sure there is like a complicated way to do it on here, but the way that I do it is, if you go to, let's go back to TradingView. If you are connected to a paper trading account, so let's go down here, get a paper trading account set up, connect that with your TradingView, and what you can do is now when you press that same P&L box, risk here, you can right click this box, hit create limit order, and on the side, this will pop up an entire window where you can see exactly how much money you're risking and how much money you're rewarded if the trade plays out. So where it says units right here, let's say I want to use 10 MNQs, okay, so 10 micros. So I put in 10, I can see with this position that my risk, I'm risking at 34.40 and my reward is 47.25. Super, super, super simple. So what you want to do is you want to have Top Step open on, some of you guys may have monitors, some of you guys may not. You want to have Top Step open in one window, and then when you're seeing your setup start to play out, go into TradingView and just map it out with the P&L box. A lot of people struggle with that, and it's kind of crazy because I could never personally enter a trade that I don't know the exact risk on. That would it would psych me out way too much. So we'll do it one more time. Let's say I'm going to take a trade. I'm going to take longs here. My profit target is up here. My risk is here. Right click, create limit order. I want to risk around $500 on this trade. So 5 would bring me at about 440. 6 would bring me about 528. So I would personally probably risk 6 contracts because this would bring my risk to about $528, which is, that's what I want. I want to risk around $500. That's all you have to do. It's so simple, and then you execute the trade on Project X. So now that that's out of the way, it's pretty simple, pretty self-explanatory. Now I want to get into a funded account risk management plan. So a lot of people will pass evals, they'll get on their account, and then they'll either size way too heavy or they'll size way too light and eventually end up blowing the account because they're making barely any money, and then one day they just spiral out of control. So I want to go over my risk management plan. So had this already mapped out. I came prepared. So we'll start from the very first thing. So with a Top Step 50K account, seems to be the most common account that people use. First, we have to pass the eval. So the evaluation, how does it work? Your account balance starts at $50,000. This is simulated money. Nothing about that $50,000 is real in any way, shape, or form. If you get the account to $53,000, you pass the account and they end up funding you with capital that you can trade and actually get payouts from. If that account goes to $48,000, so if you lose $2K, then you blow the account and you have to start all over again. Now, with Top Step, you can't just get to that $53,000 in one day. They have a 50% consistency rule, meaning of the total profits that you need, which is $3,000, you cannot make more than 50%. So you can pass those evaluations in 2 days by making $1,500 per day. A lot of people confuse that with 2 trades. No, it has to be 2 separate days. 2 separate days. So you can pass it in 2 days. That's the minimum amount of trading days it takes to pass. Now, I've posted a video. There's a video on my YouTube that shows exactly how I trade evaluations, my exact strategy, what I'm risking, everything like that. But to put it in simple terms, I trade them very aggressively, but that's only because I know what I'm doing on the funded account, and I know that being on the evaluation for too long is simply just wasting time. So I pass them very quickly. I am looking to pass that eval in 2 trades, and I am risking 2K, which is the full drawdown. I'm risking the entire drawdown to make 1.5K. So it's quite literally a negative risk reward. It's a 1 to 0.75. All you have to do to pass the eval is win 2 negative risk reward trades. If you cannot do that, then you shouldn't be on a funded account to begin with. And keep in mind, I don't pass every single time on the first try. Sometimes I blow an account or 2 before I pass. But in my opinion, losing that few $100s to buy a few more accounts is worth it to get back on a funded account quicker. So I trade them very aggressively. 2 trades, risking the full account on both trades. That's the way I do it. Most of the time, I can pass it pretty quickly. Now, when you actually get to the funded account, the risk management, your strategy, it's going to depend on, first of all, are you trading a high risk to reward strategy? Are you trading reversals? Are you trading liquidity sweeps? Or are you trading continuations, which is how I trade, which I am just looking for lower RR towards a strong draw. So it depends on your confidence, it depends on your strategy, it depends on a few things. The way that I personally do it, my strategy that I trade, I have a high win rate. I'm much more comfortable having a high win rate. That way I can risk a little bit more per trade. I think prop firms honestly favor continuations a little bit more. That's just my personal take. So if I get on this funded account, you have a $2,000 trailing drawdown. Okay, keep in mind, trailing drawdown. So let's say the account starts off at $0 and I take a trade, I make $500. So I end the day, I'm up 500. My drawdown is now negative 1,500 rather than negative 2,000. So that 2K, it keeps on trailing. Now I have enough experience, I've done enough back testing on my model. I know that as long as I'm trading efficiently and as long as some crazy losing streak doesn't happen, I should not lose more than 3 trades in a row. Okay? I shouldn't even lose 3. Like, I rarely go back-to-back losses because I have a high win rate model. So I take that $2,000 drawdown and I'm like, okay, if I know I'm not going to lose 3 trades in a row, then I can risk a third of the account for every single trade. And 650 times 3 is 1950, which is pretty much 2K. So I am willing to risk $650 per trade. $650 per trade. That is my max risk per day. I will not go over that. Because I know as long as I stick to this $650 risk, I'm not going to blow up and have some day where I lose half the account or 2/3 of the account. No, $650 risk. That's all. That's the way I measure it out. When I first started, we got a little typo here. I don't want to look like an idiot. But when I first started and I was building confidence with the model, I was risking 400 to 500 per trade because 400 per trade gives you 5 trades, 5 losses before you blow the account. 500 gives you 4 losses before you blow the account. So it completely depends on your strategy. It depends on your confidence, your experience. There's a lot of things that go into it, but it's very simple as just using percentages. Like if you only want to risk 20% of the account, risk $400. That gives you 5 trades before you blow the account. If you're a little bit more confident, you're willing to risk a little bit heavier, you know that losses aren't going to come as often, risk a little bit heavier, risk a third of the account, risk $650. That's how I do it, and that's how I'm able to scale these accounts quickly. Now, I trade with an average risk to reward between, I'd say about 1 to 1, 1 to 2. So let's say I'm doing like a 1 to 1.5 risk reward, I'd be risking $650 to make $975. So at that point, let's say I take 2 trades. Both of those trades hit for $1,000. Okay, so now the account is at 2K. What happens then is once you get it to $2,000 in profit, you no longer have that trailing drawdown. So let's say I win another trade and I get that account to $3,000. Now my drawdown is not 2K anymore. My drawdown is 3K. So now what I would do in that situation, my plan, this is called building a buffer. And what I do, obviously you have to pay a little bit of money to get the accounts in the first place. So once I get my account to around $3,000 to $4,000, somewhere in that range, it can even be $2,500, whatever you want it to be, I take a payout. I don't take the full payout. I take a small payout just to secure the ROI, whether it's $1,000 per account, maybe a little bit more depending on what I'm at, but I'm just taking a payout to secure the return on investment. After that, let's say I got my account to $3,500 and I took a $1,000 payout from each account. My accounts would then be at $2,500. After you take a payout, your account, as soon as it hits zero, that's when you blow it. So the trailing drawdown is completely eliminated. I'm at $2,500 in my balance. I cannot make that account go to zero. So at this point, this is how you scale efficiently with prop firms, because now I have $2,500 in the account, but I don't have that trailing drawdown. So originally, I had a drawdown of 2K and I was risking 650, which is a third of the account. Now I have 2,500 in the account. Why would I risk any less than a third of the account? I don't just keep risking 650. No, if I'm confident in my strategy, I'm going to risk a third of that account. So what is 30% of 25? That's I think it's a little bit over 8. So $800 is what I'd be risking per trade. If my account was at 2,500, I'd risk, it's like $800 or $850. So your risk goes up. Scaling up has nothing to do with your take profit. Scaling up has everything to do with how much you are risking. You should decide, do I want to risk a quarter of the account, a third of the account, a fifth of the account? And as you build that buffer, that's the same percentage you're risking. It's not staying at the same thing when you had that 2K drawdown. If you get the account to, let's say we get the account to $3,000, I'm still going to risk a third of the account. Now my risk is going to be 1,000 as opposed to 800. If I get the account to 6,000, I'm going to risk 2,000. And Top Step doesn't have that consistency rule. That is how you get those big days. That is how you see these people hitting $10,000, $20,000, $30,000 days, because they have such a buffer in their account. They're willing to risk the same percentage that you would risk on a 2K drawdown, but they're just using that same percentage with a $10,000 buffer in those accounts. And that is how you build accounts. So the last thing that I wanted to go over, we talked about a funded account risk management plan. Pretty simple, but the biggest problem that I see is people breaking their risk management plan. And I understand, we're all human beings. I understand that psychology comes in, emotions come in. I get it. I know we can't be perfect, but what absolutely just boggles my mind is if you guys use Project X. So let's pull this up. If you use Project X, you open the chart, it kind of looks like a video game. You have all these colorful different buttons, whatever. It makes you want to treat it as a video game. But one thing that they did a really good job with, and is actually pretty credible, is if you go into settings here, hold on. Okay, that can wait. If you go into settings here, risk settings. The fact that some of you do not use this to your advantage, it's incredible. It's absolutely incredible. If you have a problem with over trading, if you have a problem with risking too heavy, if you have a problem with not risking enough, whatever it is, this can solve all your problems. It literally has here, personal daily loss limit, personal daily profit target. I don't recommend using that. Maximum trades per day, setting lockouts. The fact that some of you aren't using this and are still over trading and over risking, it's absolutely fucking insane. I can't, if you have an over trading problem and you trade on Project X, or if you have an over risking problem and you don't have anything in your set, you should look in the mirror and just, you seriously should look at yourself and be like, I am a dumbass. Because it's literally built into the program. It makes it impossible, literally impossible to break your plan. And some of you don't fucking use it. And it's just, I can't, I can't tell people this enough. It's right here in front of your face. You could set your daily loss limit. You can set a max 1 trade a day lockout, which I highly recommend, because that's what'll happen. People take a loss, they'll get break even, whatever, then they'll just spiral out of control, and that's when accounts get blown and all shit hits the fan. So if you are trading on Project X and you have issues with FOMOing, over trading, revenge trading, risking too much, go in here and set some limits. If you only want to risk 500 per day, go in here and type in 500. If you only want to take 1 trade a day, maximum trades per day, put in 1. It's not fucking rocket science. Like, I don't understand how people break their risk management plan. Now, I don't have anything set because I'm not a dumbass, and I realize that over trading, revenge trading, oversizing, all of that just leads to blown accounts, bad habits, and you're never going to reach consistency. But I've learned that over time. I have 3-4 years of experience in this game. I know that that shit's bad. If you're newer, you're going to experience some of those emotions still. Set your fucking parameters in here. It's not that difficult. Go to risk settings and figure out what your risk is going to be. Go back to this risk management plan up here. So, okay, I want to risk 650 per trade. Let's say I have a rule that max 1 trade a day, or if I just want to have a max daily loss limit of 650. Okay, great. Now I'm going to go back into Top Step here. I'm going to go into my, if it'll let me pull it up, I'm going to go into my risk settings, and I'm going to type in 650. Problem solved. That's all you have to do. Click save and you're done. I can't believe people don't use this to their advantage. It's so simple, and it prevents you from doing any type of bullshit on the charts. So if you don't already have this set and you have issues with risk management, go set it up right now. Just go do it. Go get it out of the way. And I promise you, in the long run, it will help you so much. So much. It completely eliminates blowing an account in one day. Completely. This is fantastic, and I think it's a great thing that Project X added into their platform. But that, in terms of risk management, is all that I have. So if you have an issue with risk management, watch this video again, watch it twice, watch it 3 times, whatever you have to do, and get this dialed in, because this is probably the number one thing that just wipes traders off the board. But as always, I have a link to my free Discord. It's in the description on this video. I post my bias every single morning. I review your trades. I give commentary throughout market open, and it's completely free. So I highly recommend you join that. But that is all I have for you guys today.